Hey everybody, Randall Cornett here. Hope you guys are having a great day. AMC is obviously ripping today. Really good to see. I was expecting that we were going to have a nice strong bounce back, and I think we're right where we need to be. Obviously, we're seeing a little bit of resistance around like that $39 level. I think when we break that, we will see a bit of a run. That being said, though, I do want to talk about, I guess this is more directed towards Webull users, and I'm going to do a series on this where we'll talk about all the different brokerages and kind of what I can find. But for now, we're going to talk about Webull and their connection with Citadel. So we'll jump right into it. So I got a few documents that I got up here for you guys, and we're going to go through them. So when diving into Webull's public stocks and options routing report, we can disseminate that a large part of our retail orders are being routed to venues such as Citadel, and in turn can be routed from themselves to basically something like one of their ECNs, which would be Citadel Connect. So the data that we have here is from the first quarter of 2021, and we'll be highlighting the month of January and the month of March. So very unique to see. So if you look at the S&P 500 stocks, so we're looking at January 21, and we're looking at the payment for order flow basically from Webull when it comes to S&P stocks. And we're going to be looking directly at, I would say, just Citadel for now, because I'm going to do a series of videos. We'll be doing videos on Virtu too, because I think they're the next big major player in all this. But for now, we're going to focus just on Citadel. So for the S&P 500 stuff, for the non-directed orders, 54% of the orders were routed to Citadel Securities. 41% of them were market orders, and then 54% of them were market limit orders. So, and then the other type of orders, I guess, which, I'm not really sure what that includes, was 77%. And then we can look at what their payments are in the millions for these orders. So now if we scroll down, we'll look at non-S&P 500 stocks. Again, non-directed orders, 56% of the orders are going straight to Citadel Securities for them to, execute. So why that's important is, again, if we know that, Citadel is the enemy, and we know, and I'm not saying that all of the orders are going to, Citadel Connect, but just the ability that can happen is scary enough for me. So this is I think are good examples of how sometimes you could be hurting yourself by using certain brokerages. And to be honest with you, and somebody in the video comments, if you guys want to, I'll make sure that I highlight this in the next video, but I actually couldn't find a whole lot of information when it comes to, I don't use Webull, number one, but number two, I didn't find any real good explanation on actually how to direct your orders in Webull. So if somebody wants to fill me in on that, that would be great. Moving on, if we want to look at the options market for January 2021, again, Citadel Securities, 51% of non-directed orders that were on the options were routed to Citadel. So now let's move forward to March 2021, and we'll look at the S&P 500 stocks again. So now we're looking at 44% of Citadel Securities getting that order flow. What I didn't look at compared to the video, but let's go back up to the S&P 500. So Jane Street had 19% here, and now they have 24%. So their position actually increased in terms of percentages. So they're getting a little bit more of that order flow. Apex looks like theirs is as well, because they had 10%. And then let's look at Two Sigma, 7.7, and they were at 4. So, and then Virtu obviously increased. They weren't even on the chart in January, so they have 5% now. Now, what's unique about this too is you're looking at these companies. So this is a theory that I did have, but because I see the increase in other venues, maybe not so much, but I was saying, hey, maybe the apes are picking up on the idea that we have a little bit of control in this area, right? Like we can use brokerages that allow us to route our orders and things like that, so we could avoid going to companies like Citadel. I was hoping this number was a positive reflection of that, like, hey, this number's going down. And it could be in part, you know what I mean? Maybe people are selecting other venues to execute through, and this is why that Citadel number is going down. So moving on to March 2021 of the non-S&P 500 stocks, 44% of those are still going through Citadel as well. And then we look at the options for March 2021, 43% going through Citadel. And it looks like Dash and Wolverine were added in March 2021. So it looks like they're getting a little bit of that order flow as well. So Webull payment for order flow, the Webull payment for order flow is low compared to the competitors. Like, so you're talking other big, brokerages, but I was going to start with the small fish first because, and a lot of apes that I know use Webull. So I thought it was important to highlight. So it's low compared to the competitors, but it shows the strongest percentage gains over the past 15 months. So basically the amount, the payment for order flow amounts are increasing every single month as the chart displays. And obviously March was the last time that we got this report. We'll get another one soon, actually, but that was its highest month. The payment for order flow in March 2021 was 27 times higher compared to January 2020. March 2021 was also the strongest payment for order flow month in the history of Webull, with a total of 17 million received. With this steady growth, it's most likely they will outrank other brokers in the midterm. So they are moving at a very rapid pace. And that's probably because they're having a surge of retail investors that are unaware that this is happening, moving onto their platform. When we look at venue statistics, right? So looking at the payment for order flow per venue statistics paints a clear picture about the market leaders. Citadel, Global Execution Brokers, which they do a lot of the option stuff, and Virtu Americas dominate from the venue side with about 75% of the overall business. So obviously Citadel's 2020 total was, in the billions, but already so far, they're already at 450 million just for the first quarter of 2021. So you could see there's a pretty big gap between the top three, Citadel, Global Execution Brokers, and Virtu. And so this kind of brings me to another one of my theories. And I'm not saying this is true, but I think that when we see days, even like today, where we have large amounts of like shares being borrowed. So there was X amount of shares that were borrowable, and we see all those get sucked up. I tend to believe it's one of these three companies that are probably borrowing those shares because of the amount of order flow that they're getting, and they have to take the opposite sides of these trades. So interesting to think about, and something that, like I said, it's something that I believe in, but that's just my theory. I don't know much about the markets. I'm learning just as well as you guys are, which is part of the reason why I created this channel. So if we look at payment for order flow by asset category, the categories non-S&P 500 stocks and options orders dominate the payment for order flow revenues. It is no surprise, since the spread, which is the baseline for income for the S&P 500 stocks, is small, since the liquidity is immense. It's saying there's tons of liquidity in the S&P 500 stocks, right? Therefore, it's hard to generate price improvements for clients on meaningful income to be shared between venues and brokers. The payment for order flow is dominated by the options and trading category. So it means that these guys, they see that, there's a lot more money to be made in the payment for order flow from the non-S&P 500 stocks and the options. So that's pretty much what this graph shows, and options obviously getting the high end of that payment for order flow graph, right? So that's where they're, obviously we know that they can make their money on the premiums and stuff, but they also have a huge advantage to obviously take those as well. So they're paying even more money to the broker to take those, obviously, because they can basically rake us on those premiums by people that don't really know what they're doing when it comes to options. You can also see the various venues are specialized in one or other asset category. Venues like Citadel pay for order flow in all three categories, from S&P 500 stocks, non-S&P 500 stocks, and options. Whereas like Global Execution Brokers and Dash Financial are specialized in options, while Virtu, usually focuses on stocks, although they did dabble a little bit in options. But you can see this. So if you look at Citadel, they have huge payments in basically all three categories when you look at it and compare it to the other venues. So something interesting from some of the documents I was reading too, this is from Webull themselves. The report provides information on the routing of non-directed orders. Any order that the customer has not specifically, which I was trying to say, if somebody wants to give me instructions on how I can give it to Webull users, I will do that. So any order that the customer has not specifically instructed to be routed to a particular venue for execution, for these non-directed orders, Webull has selected the execution venue on behalf of its customers. Well, where do you think it's going? Well, we know where it's going because the majority is, 50% of all of these venues, or 50% of all the, different types of trading that's going on, is all going to Citadel. And so from the Citadel portion right here, it says Webull receives payment from Citadel Securities for directing order flow. Payment varies based upon a number of factors, including but not limited to size of the order, time of the order placement, type of the security, the underlying price of the security, and any special handling instructions. Payments received from Citadel average less than, what that number is, a fragment of a penny per dollar of executed value for the order flow in the period of Q4 2019. Something interesting, this was a disclaimer on basically these filings, which I pulled from Webull. There was a little disclaimer on each one, and this one I thought was interesting. So Citadel Securities, 2021 Q1, Webull receives payment from Citadel Securities for directing order flow. These payments were not contingent upon volume-based tiered payment schedules, agreements regarding minimum order flow, incentives for exceeding order flow thresholds, or disincentives for failing to meet order flow thresholds. So what that means is that these guys are actually more inclined, because it looks like they get incentives to send more order flow there, and they almost look like they could be penalized, maybe like there's a tier system or something, if they don't meet order flow thresholds. So I thought that was really interesting. So anyways, for that being said, I will do these for all brokers, and we'll be looking into all of these venues, not just Citadel, because there are some other major players as well. So that being said, do me a huge favor. Please like, comment, subscribe, all that good stuff. And I will catch you guys on the next video. Love you a long time. Peace.